many times we gotta teach you? How many times we gotta teach you this lesson, old man? Holy freaking Toledo. Guys, what the freak is going on, baby? It is your boy Trey from Trey's Trades, where we freaking talk fast and slap the ask, baby. I like to reference by saying that I'm not a financial advisor nor expert, obviously, so take what I say with a grain of salt. Let's get into the video. So today, we're gonna be giving you the update on ticker symbol AMC. Obviously, we had ourselves a beautiful, freaking, stupid, filthy, disgusting lemon pepper tendies day. This was nasty. We were up 35% at the peak of 50% on AMC stock. And guys, we're going to run you through a couple different things here, but the main point that I want to drive home in this video is shorts still have not covered. They're still doubling down. They're still playing the stupid games, and they're still going to win stupid prizes. It's as simple as that, my friends. The strength of this is absurd. We're going to go over the overall technical analysis. We're going to go over the Ortex data. I want to go over the short volume percentage ratio. I want to go over Stock Tracker, show you an idea of how many shares are actually available for shorting as it sits right now. We're going to finish up by giving you an idea of what we may be able to expect in the next couple of days, right? But keep in mind that obviously it's going to be incredibly difficult to actually know what is going to happen here with AMC stock. We got to take it day by day. This is uncharted territory. This is uncharted waters, and we're just going to give it what we can. So without further ado, let's get into the video. So I want to start off here with Ortex, and I want to show you this for a couple specific reasons. It's to show you that shorts have not been covering. The short interest is down about 0.45% here at the close of the day. However, it was up as high as 1.2% total on the day, right? This is not a short squeeze. You still have 17.02% estimated current short percentage of free float. That is absurd. 83.6 million shares, not including failure to delivers, which are synthetic stock, and not including the naked short positions that are likely out there circulating on AMC at this given time. Utilization, beautiful. Right? Cost to borrow is pretty insignificant, pretty low at this point. Shares on loan about 130 million, and this hasn't changed. And I think that is for a specific reason. I think it's because lenders do not want to take on any sort of risk of a default on loan with this stock because they recognize how fast and how quickly this can get out of hand. So I don't think that shares on loan is going to go much higher. However, the short interest could go higher if we end up seeing more shorts that double down in positions throughout the next, couple days and following weeks, right? But I really do think the ball's rolling right now. I think this is the beginning of the squeeze, my friends. We're looking pretty freaking stupid, filthy, disgusting right now. So the shorts haven't covered. That's the moral of the story. You've got a net change of 0.45% for the downside. That's not a squeeze. That's as simple as it is. This is not squoze yet. There's still more upside to come. You guys should be sitting absolutely filthy, disgusting happy right now. Stock Tracker currently has 35,000 total short shares available to borrow. Has been at 0 intraday, 65,000. If you watch my morning video, there was 1 million shares available to borrow at the beginning of the day, and that has dropped down significantly. They ate up all of it. They're still doubling down on the stock, guys. It's as simple as that, right? The overall trend is this is a hard to borrow stock, and that is going to put some pressure on short positions. That short borrow fee rate is going to go up as that, there's less available shares to borrow, and they can't double down anymore, right? There is going to be immense risk associated for any short position, any hedge fund out there, and you're looking at freaking Tenny Town. That's as simple as it gets, right? This is a trend. It's not the overall picture. This only takes limited exchange data and what is reported. Keep that in the back of your mind. This is reported data. That we know there's malpractice, corruption, fraudulence that takes place in terms of mal-reporting from those hedge funds out there who are shorting the stock. So keep that in the back of your mind as well. The short volume percentage, I want to show you this specifically because this is still a heavily shorted stock. We have had 1, 2, 3, 4, 5, 6 straight days now where the short volume percentage has been over 50%, and still these guys are getting absolutely bled dry. Now this is a 1-day lag, so this is showing you May 26th, not today. So I'd be interested to see what it is tomorrow, right, when we see this data. However, guys, this is absolutely disgusting. We are beating the snot out of these guys. They can't even stand up. They're literally down and just getting kicked to shreds. I mean, this is absurd. They're shorting this thing as hard as they can and just getting beat by pure FOMO, rage, and anger and buying. I mean, the liquidity and the buy power coming into the stock right now is just nasty. That's as simple as it gets. It's just getting they're getting cooked. That's as simple as it is. We're going to finish this off with the overall technical analysis, and I'm going to do my best, the best that I can to give you some sort of technical analysis on this stock and what we can expect. But guys, the name of the game here is setting higher lows and higher highs, and we're doing that to a T, and that shows you the overall strength of this stock right now. And that shows you want to know if apes are buying and holding? You can see it in the psychology of the charts, right? Higher low, higher low, higher low, higher low, higher low, higher low. We're continuously doing it. And to be honest with you guys, this is a bear trap setup. Now, if you don't know what a bear trap is, I'll paint it out for you in super plain English. Check this out. A bear trap is when you have a wick that, you know, basically develops a level of support that they want to break down underneath as shorters, and you get a second wick that breaks down beneath that level of support and is a false breakdown. This is a bear trap. Typically, when you see this sort of thing, you have the continuation of trend following sometime later. Now, I can't guarantee this is going to test $30 here in the after hours or in the pre-market, but what I will say is that the setup, you know, 9 times out of 10 typically brings you some nice bullish price action. So that's a good thing to see here at the close. But what we're looking at in terms of resistance, right? $30 is that next even round number of resistance where you can see another $5 gap up to 35. After that, $35, obviously level of resistance, $40 are to follow, but $40 is the critical level, and I'm going to tell you exactly why. June 18th, you have got a stupid amount of call options that will run in the money. 193,000 total call options, open interest at that $40 strike. If those end up getting hedged for, those run in the money, you're looking at some pure filth in terms of overall hedging, price action, the gamma squeeze. That would drive shorts to their grave. They would be done. There's no way they can recover from that sort of thing. And even still in the after hours here, you're seeing a little bit of a bounce back up. I mean, this is looking beautiful, guys. I'm telling you, AMC Stock's not done. This is where technical analysis is tough. I can give you like 1 day, 1 minute intraday updates, but in terms of what this is going to do, right, it's very, very difficult to say because these are uncharted waters. There's not a lot of trend to pay attention to. There's nothing about this that's a trend. The only trend that I've got for you is setting higher lows. Higher low, higher low, higher low, higher low, higher low, right? We're continuously doing that, and that's good. That shows you the strength of buyers. It shows you that apes are buying and holding, right? That's a beautiful, beautiful thing to see. What I will do is this. I'll provide you on the best and worst case scenarios based on what has already happened here on the stock, right? Best case scenario is going to retest in the after hours pre-market or regular market hours tomorrow to break $30. We've seen talk about a pseudo squeeze, this idea of a mini fake squeeze in which you would see the stock run up to about 40 or 50 bucks. I've seen $50 and $100 tossed around by bots on YouTube. Some people think these are their, you know, hedge funds that are trying to get people to sell early or whatever. I'll tell you this, if it runs up to 50 bucks on Friday and it breaks $30, runs up to 50 on Friday, you know what's going to happen? People with call options that are out the money or run in the money, they'll make money. That's liquidity. Bam. It's straight into them. They can buy stock with that. They can buy options with that. They can do whatever they want to do with that. That's a dumb idea. If they do it, if it comes to fruition, guys, rub your freaking hands because if they flush it down, take your profits on your calls, make that capital, buy stock. Simple as it gets. It's as simple as it freaking gets. So best case scenario, break over 30 bucks. You're looking at 35.40, 45.50, each individual $5 round number as levels of resistance towards this overall run up, right? That's the best case scenario. Worst case scenario is this, right? You're looking at the potential of a retracement. Now, if you want to drop a Fibonacci retracement, it's super easy to do. This gives you an idea based on previous trends of where a stock can pull back to and retrace to, right? Now, 50 to 61.8% is typically the retracement level that you see out of AMC stock. So you'd be hoping for a bounce somewhere in this designated level if it was to take a little bit of a dip. So if you're looking for the opportunity for a little bit of a dip buy, just based on the strength and based on how this thing is running, it would end up being somewhere about between $24.53 and about $25.50 if you're looking for the best opportunity to buy stock for very cheap, right? Now, I can't guarantee it's going to come to fruition. That's the best, the worst case scenario, I should say, is you get a little bit of a dip, but it's already kind of tested that zone right here with this bear trap setup. This is already coming to fruition if it ends up playing out. I'd be absolutely jacked to the teeth, but that's the best case scenario if you'd like to buy stock for cheap, as it dips down to this 50 to 61.8% retracement. Obviously, what do I think is going to happen? I think you're more inclined to believe that AMC is going to continue its run, that you're going to get a break over $30, and just based on the momentum and the bullish nature of how this is running. I mean, it's as simple as that. The liquidity getting put into this, stupid. The volume, the volatility on this, stupid. Shorts not covering, even stupider. It makes no sense. So, guys, I'll tell you what, buckle in because you are riding a straight trip to Pluto. Get ready for freaking Chicken Church, Kraken Kingdom, Tendy Town. The freaking chickens are getting ready to roost. This is as good as it gets. You should be jacked to the teeth. I'm jacked to the teeth. And that's what I've got for this freaking video. So blah, blah, blah. I know the whole spiel. Drop a like, consider subscribe. Whatever you want to freaking do, my friends. Thank you for watching. Hodl on. And remember your why. Remember your why. I'll tell you what. I do this for my pops. You find that one person out there. Catch you on the next one. Much love and peace.